Welcome to my video. I'll trust you'll find it helpful and informative. Please remember to like and subscribe. Thank you.
What I did is I went through the chapter and then I looked at all the cost concepts that we are supposed to know. The next column, the second, and I put that in the first column. Then the second column, I put down the formula to calculate that specific cost component. And then in the third column, I have given you an example. Okay. This little table that's in here, you will find nowhere else but in this presentation. So this is where it is. It is extremely important. Okay. But it's also a very handy summary for you. So basically what I would say to you is you need to almost memorize this thing, because it summarizes about 20 pages for you in the textbook, and it's all based here on one single example. So I gave you the example there. I say, assume a fixed cost of 20,000 and a variable cost of 322,600 Rand for 20 units of product X sold at 3,000 Rand excluding VAT. And that's important, guys. If I gave it to you including the VAT, you would have had to calculate the VAT exclusive amount first, because we do all our cost calculations based on the amount excluding VAT. Okay, so the first concept that we have there is sales. Now, we can talk about sales, we can talk about turnover. It is really one and the same thing. So let me just put that in brackets in there for you, so that you know we are talking about our turnover. And what is our turnover? It is our units multiply by the unit price. Now, by the way, this is our sales or turnover for this specific product X, not for anything else. This is not the company's turnover or the company's sales. This is the sales that applies to product X. Product X can be anything. Think of something that would normally cost 3,000 Rand, and in your mind, make that product X. Okay. So the formula says we take the number of units multiplied by the unit price. And there I do not mean the unit price of the cost price. I mean the unit sales price. Okay, so let's have a look here. So our units multiplied by a unit price of 3,000 Rand is 200, because it was given 200 units. Sold, you see, sales price at 3,000 gives me 600,000 Rand. Now, what we need to understand is that when we talk about cost, we're talking about the total cost, and the total cost is the sum of the variable cost and the fixed cost. Let's go back here. I said to you, when we classify, we must just make sure that we account for absolutely everything. And this is a simpler classification. So in our cost calculations, we make use of the simple classification that simply distinguishes between fixed cost and variable cost. Now, our fixed cost was given. It's 20,000 Rand. And our variable cost was also given. It is 322,000 Rand 600. So therefore, the total cost is the sum of the two. So we simply go and we say 20,000 given plus 322,600 gives us 342,600. Okay. Once we have that, we can now calculate the total cost per unit. And the total cost per unit is simply the total cost that we have just calculated divided by the number of units as it is given, which is 200. So the total cost per unit is the total cost divided by the number of units, 342,600 divided by 200, and that cost is now 1,713 Rand. Okay. And that's handy to know, but what is more important for us to know, and you will see why it is more important just now, is our variable cost per unit. Okay. So our variable cost per unit is that variable cost that was given to us, this 322,600, divided by 200. And so this time the answer is 1,613 Rand. Okay. And now obviously, the moment we have that, we would be able to calculate the gross profit. Okay, there it is. Now I'm going to do marginal income after ratio, just after gross profit, because there's actually more than one way to calculate it, but it's okay. So the marginal income is simply our sales that we calculated there, minus our variable cost. Okay, so we have our turnover there, our variable cost was given, and so we get there to our gross profit. Our gross profit in this case is 277,400. Now, when it comes to our marginal cost ratio, we can take our variable cost and we express that as a percentage over sales by doing the following. We say the variable cost that was given, we know it's not going to change, is 322,600. We know what the sales are, and then just to change that decimal into a percentage, that is why we multiply it by 100, and I have the percentage sign there so that our answer can be expressed in terms of percentage. Okay, so this is our marginal cost ratio. Now we get to our marginal income ratio. Okay, now here I've said it is our marginal income divided by sales. Please note, guys, marginal income and gross profit is one and the same thing. It's also important for the bookkeeping that you do that you realize that marginal income and gross profit is the same thing. So now you've calculated your gross profit. You have your sales and you can calculate your marginal income ratio, just like you did your marginal cost ratio. So now you take your marginal income or your gross profit, you divide that with the sales and you multiply it with 100%, and then you get 46.23. That's the one way of doing it. The other way of doing it would be to say, if I already have my marginal cost ratio, then I can just subtract that from 100 and I will give my marginal income ratio, or the other way around. If I have my marginal income ratio, I can simply subtract that from 100 and that'll give you your marginal cost ratio. Okay, so you don't have to do this again. If you have the one, you automatically have the other. Okay, now we're talking about our marginal income per unit. Okay, and this is important because it tells you really, if I sell a unit, how much is it actually worth for me? Okay, so now we've calculated our marginal income at 277,400. Okay, and we divide that by our number of units, and so we see really my marginal income per unit is 1,387 Rand. Okay, as opposed to my total income per unit, which is 3,000. So I sell it at 3,000, but really my marginal income from that single, my gross profit on that single item is 277,400. Sorry, man. per unit is 1,387. Sorry about that, guys. It's in the wrong column here. Okay, so this is my profit. Okay, so every time I sell something, I actually want to look at this amount because that will enable me to pay the salaries of the people I'm working for. Then, when we calculate the net profit, we simply subtract the fixed cost from the marginal income. Okay, so now we've calculated our gross profit. We know it's 277,400. If we subtract our fixed cost from that, we get our net profit. And our net profit in this case, based on 200 units, remember, is 257,400. Okay, once we have done that, we can calculate our net profit ratio. Every time we see ratio, we express it over sales, guys, always. So our net profit ratio is our net profit, which we have just calculated, divided by sales, multiplied by 100%, and so our net profit ratio is 42.9%. Okay. Then we get to our break-even points in units. Now, this is really the question that I guarantee you are going to have, and this one you have to remember the little formula. So your break-even point is equal to your fixed cost, that little 20,000 there, divided by your marginal income per unit. That will tell you how many units you have to make or sell in order to meet all your expenses. Okay, so here it is. 20,000 divided by 1,387, the marginal income per unit that we calculated there, is equal to 14.42. But now we have a challenge. So you cannot possibly sell 0.42% of a product. That is a broken product. So you must always round up. And I did this specifically so that your decimal is less than 0.5, to show to you that even if your decimal is less than 0.5, you are still going to round up. Even if your decimal was 14.1, you would have rounded up to 15, because anything before the decimal is not enough. If I sell 14 of this unit, I'm going to fall short. So therefore, I must sell 15 units, and we always round that up. So the break-even point in Rand is our fixed cost, again, divided by the marginal income ratio, which we calculated there. And then we get the amount of 43,261.95. And this is really the way they want you to do it in the test. I will actually say to you that it is not the best way in the real world. In the real world, you will look at your break-even point in units and say, okay, so really my break-even point in rands would be 15 times 3,000, and that would be 45,000. Okay, but please, when you do this calculation in a test or an exam, do it in this way. Now, okay, guys, what I'm going to do now is I am going to duplicate the slide for us. And let's just call this example. Just so that we can actually confirm that you understand this. Okay, so our example now is, let me, I'll use a text box. Where do I insert a text box now? Text box. Okay, so let me just put the text box in here. And now let's make it a bit more. I swear that was a text box that I was trying to put in there. Don't know what happened. Let me try again. Text box. Oh, here it is. Parked it in the wrong place, man. That's what the problem is. Okay. Now let's take a product. Now we're going to be a bit more specific this time. So I am looking at what I'm next to me, and what is next to me is my cloth mask. Okay, so that is what I have. I have a cloth mask next to me, and I know that I am going to sell these cloth masks. This is my plan. Let's call it my plan. My plan is I want to sell masks. Let's just do this a little better, bigger, like that. At 50 Rand each. That's most now a very good question. Okay, I know exactly what I want to do. And I know that material, material, all material cost 20, let's make it 21 Rand per mask. And I say I will pay myself 15,000 Rand per month. And then the other thing, I think I can sell well, I think I can. Let's call it. So say the market is not a problem. I think I can make 100. No, that's very brave. I think I can make 25 masks per day. Okay, so that's the plan. By the way, guys, the reason this is important is remember, you are going to have to come up with a business plan. Okay, so this is the most simplest of business plan, and based on this little plan here, I am now going to see if we can do this calculation. So here we say, I can actually take this out. Let me go here to the table and delete that row now. Okay. Now let's see. Do I have the number of units? Yes, I have. My number of units is now 25. And let's say I will work 24 days a month. You're brave. No. Hey, it's COVID. You need to make money. And you've lost your job. So that's your plan. So now we can say, okay, I can make 25 masks a day times 24 days. And I am going to sell each of that at 50 Rand. So let's do that. At 50 Rand. Okay. And so I'm going to take out my calculator, and I am now going to do that calculation. So let me see. So it's 25 times 24 times 50, and I see that it is 30,000 Rand. That is my turnover for the period. Now I'm looking at my total cost. Now, so my total cost is my variable cost plus my fixed cost. Now, in this case, I know that my fixed cost is 30,000 because that's what I said. I want to pay myself 30,000. So now I must calculate my variable cost. My variable cost is equal to that same 25
Mr. J, you
times,
said 15,000. You said you want to pay
oh,
yourself
15.
15,000.
Yeah, no. Ooh, yeah, no, that's true. Okay, because that will be a complete disaster if I already saw that that was not going to work. Okay, 15,000, sorry. Thanks, Cara. And my cost is 25 Rand. 21 Rand, eh? That's what I say, times 21 Rand. I write the instructions and then I still cannot follow them. Okay, so let's see what this is. Now I have 25 times 24 times 21 equals 12,600. So that is 12,600. That is plus the 15,000. So my total cost is going to be 27,600. Okay, what is my total cost per unit? Okay, well, it is the total cost that I've just calculated, the 20,600, divided by the number of masks that I'm going to make. Now, really, by now I should know what 24 times 25 is, but I don't. So let me just quickly, it's 600. Okay, so I'm going to make 600 masks a month, and then 27,600 divided by 600 is 46 Rand. Oh, wow. That is my total cost per unit. It's 46. Now, here's the problem, guys. Often when we start with small businesses, what we do is, and I'm going to just delete all of those so that I'm not confusing you if you look at the slides later, is we look at the material cost and then we say, oh no, I can go into this business. The first expense that you must put in when you do your business plan is this thing here. How much do you plan to pay yourself per month? Because that's the reason you're doing it. If you cannot pay yourself per month, then you have a problem. Now, you might say 15,000 is a bit much. Maybe you would be happy in paying yourself 5,000 Rand a month. Okay. But please remember, when you start a business, the first thing you must do is make provision for your own salary. Okay, but we've done it here now. So now we can have a look at our variable cost per unit. That is our variable cost. Now, our variable cost is that 25 times 45, which we now know is 600 times the 21 now. So our variable cost is now 12,600, and we are going to manufacture and sell 600 units a month. So let's calculate that, and it is 21 Rand. Okay. That is my variable cost per unit. So when the COVID thing started, my wife also decided that she was going to make a couple of masks, more for the purposes of, I don't know, enjoying it than anything else. And that she didn't like the mask that other people were making, so she thought she was going to do her own. And then, of course, people started asking her, how much are you going to charge for it? And she never really thought about this thing, how much is she going to pay herself, because, I mean, she still gets a salary. But really, you cannot ever underprice yourself. Okay. So selling them at 25 Rand means that you can hardly pay yourself. Okay, now let's go and have a look at the marginal cost ratio. Well, we have our variable cost, We've calculated this a couple of times now. Control plus C. Okay, that clearly didn't work. Okay, let me just clear it in. 12,600. Let's divide that by our sales, which we know to be 30,000. Let's multiply that with 100%. And let's see what that is. So it's 12,600 divided by 300 multiplied. Okay, so my marginal cost ratio is 42%. And now I don't even have to do anything else. Here I can now already calculate my marginal income ratio. That is simply 100%. And now I'm going to change the formula here, okay? Because I'm using the other formula now. 100% minus my marginal cost ratio. So I've just calculated there as 42%, and you should see that that of course is 58%. Okay, good. Now let's do my marginal income. My marginal income is my sales of 30,000 minus my variable cost of 12,600. And so my gross profit is will be 17,400. Okay. Good. Now I can go on. My marginal income per unit. Okay, I've just calculated my marginal income. Okay, it is 17,400. And I have to divide that by the number of units that has not changed. It remains 600. Sorry. Let's calculate that quickly. 17,400 divided by 600 is 29 Rand. Oh, not the way to put it now. Okay, so that is my marginal income per unit. I'm making 29 Rand on a mask. Okay. My net profit is then my marginal income that I have just calculated. Again, 7,500 minus my fixed cost, which is my salary. So my net profit is therefore only 2,400 Rand. Okay. Now, one of the reasons we do this. Now, remember, if you start a business, and now this is not really the mask one. The mask one, I mean, nobody's going to talk about taxes or anything. You're just doing this on the side. If you start a proper business, you will get to the point where you're going to say, I am paying 27% profit company tax on my profit. And I am paying a certain amount based on my salary. Now, if you pay yourself a really high salary, that could be up to 40%. Okay, don't worry, part of the next chapter. And then you might actually say, you know what, I will rather pay myself less of a salary so that I can have a bigger profit and then declare a dividend on the profit, which is taxed at 15%, which is way less than, well, it's way less than 27. It's also way less than 40% that you might be taxed on. Not that that is your physical flat tax rate, just your marginal tax rate. Okay, but now in this case, there is a profit of 2,400. So you can now say this 2,400, I might use this and put this aside every month so that in 3 months I can buy myself a new sewing machine. so that I can produce more masks, so I can sell more and work less, so that I actually don't have to work 24 days a month. That's a lot of days a month to work. Okay. Now let's have a look at our net profit ratio. Well, we just calculated our net profit. It was 2,400. I know that my sales is 30,000. Okay. Let me multiply that with 100%. Just a note again, I mean, we did this in business literacy, but multiplying something with 100% just means that we are multiplying it with 1. 100% is 1. Only reason we're really doing it is because it now brings the percentage sign into our answer. So 2,400 divided by 30,000 equals, okay, so my net profit ratio is 8%. Okay, now I can calculate my break-even point because I know that I want to earn 15,000 Rand per month. And I know that my marginal income per unit is 29 Rand because I calculated it before. So my break-even point is now 15,000 divided by 29. And so it is 517.24, and that must be rounded to 518. Okay, and now in this case, I'm going to simply take my break-even point in units to calculate my break-even point in Rand. So my break-even point in units, and I'm going to multiply that with my sales price. The other way of doing it, as I explained on the other slide, and then it is 518 multiply by the 20 by the 50 Rand. To do that, 518 times 50 equals 25,900. Okay, good. And that's the answer. So guys, when I talk about your financial plan in the business plan, now you can go and get business plans from the internet, and then you can give me a 5 or 10 or 20-page financial plan, or you can actually populate this table. Because if you're going to do one product, especially if it's one manufacturing product, this is a perfectly valid financial plan.
Thank you for watching this video to the end. If you found it valuable, please subscribe and like.